Welcome to the Market Rebel podcast / YouTube channel now. We have a very special guest today, part 2 of my interview with Bruce Burnworth. Bruce, welcome on.
Yeah, glad to be here.
Record day today for Tesla?
Yep, almost got back up to the $500 mark. It seems like that's kind of a hard mark for Tesla to jump over. They've touched it before almost, and today they almost touched it again.
That's right. You got up to what, 494 maybe, right around those levels?
Yeah, very, very close.
Yeah, I'm a long-term holder. I do trade every now and then, not investment advice. And I sold a little bit this morning on a trade because I was pretty heavily leveraged around 456. And then you can imagine I regretted that. But
I sent out a tweet on Twitter. I said, "Don't be that guy."
Yep, don't be that guy. I was that guy. But I still 80% of the portfolio is still in Tesla, and I'm looking forward to holding for the long term. I got a couple options contracts as well, so I'm sure you had a great day with all the options you have. You still have about like 10% options. I know you're slowly, based on our first interview, converting the options to stock and borrowing against your stock using margin.
Yeah, actually, it's fairly close now to even. I think I have about the same amount in stock and same amount in options, maybe a little less in options, but pretty close. As far as number of shares, the value in the stock is higher just because it's a full value of the stock as opposed to the option to buy the stock.
So I wanted to get your updated thoughts on Tesla, on the company, on Elon, on S&P 500 inclusion, which I know Tesla Twitter's been talking about nonstop for the last 48 hours. So you may be a little tired of talking about that. But given today's unprecedented move, the price target hikes from Pierre Ferrago at New Street, as well as Adam Jonas, who finally turned bullish on the stock, I think that helped propel the stock today, as well as the whole notion of the index squeeze that Gary Black on Twitter was talking about. I think you follow him as well. So I wanted to get your thoughts on that.
Yeah, so I look at the S&P inclusion probably a little differently than others. Yes, I think there's a squeeze that's going to happen because there's going to be a lot of buying pressure. But to me, what is the most important thing is it's going to raise the level of awareness of the public and the analysts about Tesla. They will be looking closer now at Tesla and looking deeper at it. And I think they will be very surprised at what they find. The analysts will take a closer look at it. We're already seeing it, like you were saying. The analysts are upping their predictions and their price points. I think they will continue to do that going forward. You talk about a squeeze, and typically a squeeze is a short-term thing where it goes up and then it comes back down. I don't think that's going to happen with Tesla. And the reason for that is because what we should be at right now, we should be closer to $1,000 a share right now. And that has to do with Battery Day and the technology that was announced on Battery Day and is being implemented in Berlin and in Austin in the next year. And that's amazing. And the market just has not absorbed that yet, and they have not reflected that. You look at a little closer at that, what I call the 4680 tech, which is the size of the new battery. It's not just the battery, but it's also the front of the car is one casting, the structure of the car, the back of the car is one casting, and the middle is a structural battery. That's a complete change in how the car is being made. It'll be much, much faster. And in one of the summaries that Tesla did, they said it would be a 56% reduction in cost. Well, and then a 54% increase in range and a 69% reduction in CapEx. Well, most people don't do this, but all three of those need to be combined together. For example, if you want to have a car that has the same range, you don't need as much battery. But that battery that you do use is 56% less cost. So those three added together, when you take the 56% reduction in cost, which is operations cost, it's not the CapEx, and the CapEx is now 69% reduction. So you combine those two cost reductions together, and you combine the increase in range to have the same size battery or same range of battery. It's about 80% less than the current cost of the battery. I mean, that is just huge. And people don't realize that. They don't understand it. It'll be coming out, and Tesla will be producing these cars with this technology in Germany in middle of 2021. And it'll blow people's minds.
Wow. So that's crazy. I think we talked a little bit about that on Twitter, and I know that was a big discussion. And are there still people out there that disagree with your thinking, with they think that they're all separate factors and they're not all combined? Or is a sentiment out there pretty much agree with you on that?
I haven't heard, initially, like you were saying, people were saying, oh no, each one's separate. You can have one or you can have the other.
Because there were 3 different charts, the way they displayed it at the Battery Day presentation as 3 separate silos. But you're saying, which I think makes sense, and I after I thought about it more, I think you're right, that it's all really one. But then I know, again, this is not my area of expertise at all. So I was just curious as you were kind of leading the charge with that.
Yeah, like Rob Maurer from Tesla Daily, at first he was saying, no, you can have one or the other, you can't have both.
I think, yes.
Then he did a presentation later, and he said, well, the cost of the battery is reduced, 56%, but you don't need as much battery as you used to, so it's less cost. Okay, that's what I'm saying.
What you said, right? Yeah. So yeah, that was a credit to you for pointing that out, because I don't think people quite put it all together. I know you said you thought about it this was a couple of weeks after Battery Day. You'd really spent some time thinking about it. It wasn't just something you said offhanded. So that's actually, it's incredible if you really think about it, where we're not used to all 3 of those factors getting better at the same time, which is crazy to think about, and a testament to the innovation over there at Tesla and Elon and Battery Day and the whole team.
Yeah. One thing that kind of goes along with that is that I think somebody was talking about how you need to question things. When you're investing in things, you need to question them. Well, my whole thing, I grew up in the 70s near Berkeley, and you questioned everything. That was just kind of the culture in that area, was to question things.
Right.
So I question everything, and I get in trouble for that. But I question things, and I question what Elon says, and I question what Tesla says. And what's interesting is most of the time when people say you should question it, it ends up being less than what is said. It's not quite true. It's almost true, but not quite. When I question things that Elon says and Tesla say, I'm looking at like, well, they're kind of sandbagging, because they're managing expectations. They're keeping the expectations low so that people don't have too high of an expectation. So when I question it, I end up with higher numbers than what Tesla is announcing or what Elon is saying. And that's, for example, with this, I question the 56, 54, and 69, and I come up with overall, it's about 80% reduction in the cost for the same size.
Oh, I see. Okay. I see what you're saying. Wow. So you're saying that when they said 69%, they were sandbagging. The actual number you think is 80%.
Well, the 69% is the reduction in CapEx.
Okay.
And the 54% is the increase in range. And the 50% is the reduction in cost. They did not add all those together. So when I question it, I start adding them all together and come up with a larger number, which is more like an 80% overall cost reduction in the battery for the same range.
So can you walk me through the math on that, simply to get to that 80% number? Because I'm having some trouble visualizing.
Yeah. Oh, it took, like I said, it took me a week and a half to figure it out.
You got a formula sheet somewhere?
What's complicated about it is that the 56% reduction in cost is a reduction in cost. And so you take like $100 and you multiply it times it's a 56% reduction. So you're actually multiplying it times 0.44, yeah, to get the cost. And then the range is increasing. It's not decreasing, it's increasing the range. So instead of 100 miles, you get 150 miles out of the same battery. And so then you have to go back and you apply that, and it requires some math, which I don't think we should get into here.
Right.
You start combining that together with the 54 and 56, you get about a 70% reduction in cost for the same range. But that doesn't consider then the CapEx, and then you have to go through some calculations, and you look at CapEx as a percent, a percentage of the cost of a battery is in the capital facilities as opposed to the operations, and it requires some estimating. So I just said, okay, it goes from 70 to about 80%. It's probably more than 80%, but that was a big enough number for me.
Gotcha. Yeah, that's a huge number. And so it will take time to get there, but that 80% number is what you're expecting, as you said earlier, mid 2021 from Berlin, and then eventually Austin when they're able to get that up online. And then it will take time. Or was that going to be, hey, we don't know the timeline for sure, but Berlin and Austin aren't immediately going to be up to speed. I think Elon said it's going to be faster than a bullet. It's going to take another year or so. We don't know to ramp up to really realize that massive reduction. What is your kind of timeline? I know this could be anyone's guess with exponential growth and everything going on, but what kind of you like temper expectations for how soon we'll actually get there?
So I see Berlin starting up mid 2021. And what they'll likely do is they'll start up with the batteries that they're producing in Fremont. They'll ship them over to Berlin in order to do the startup with that battery. And then over the next few months, they'll be building out the facility in Berlin to build the building or to produce those batteries in Berlin. And then they'll take over. And it'll probably take, typically a ramping up process like in China. It took about a year for them to get the Model 3 up to the point where they were not just doing one shift, they were doing 2 shifts, and now they're doing 3 shifts. So
Right.
That's when you really get into the economies of scale, is when you're doing those 3 shifts.
Right.
Probably take a year after that. I'd say, mid to late 2022 is when they'll really be up to speed. And Elon was saying it would be about 2 to 3 years, I think, for those full price savings or cost savings to go into effect. So I see them doing that in Berlin, and then in Austin, I think it'll be a few months later, basically in the last half of 2021, they'll ship those batteries that they were shipping to Berlin, they'll ship them to Austin, and then they'll start making the Model Y in Austin and come out with that. And then in Austin, they'll have their own battery facility and eventually take that over. And I think what will happen is that, unfortunately, the semi-truck will be the last one. And so the semi-truck will get some of those batteries from Fremont and then probably eventually get them from Austin.
Gotcha. I know that we're both on the list. You're about 7,000, I believe is what you've said, and I'm about 200,000. And so the projected for me to take delivery wasn't until 2023, which I'm hoping they're sandbagging that and it'll be faster. But it sounds like you are thinking that you could get yours late 2021, which along with basically the earliest ones. Is that correct?
Yeah, that's what I'm hoping for. And I hope to be able to, I don't know if COVID will cooperate or not, but I hope to be able to fly down to Austin, pick up the Cybertruck, and then just have a tour of the facility there and drive all over the United States with it and turning heads every place I go.
That would be awesome. Absolutely. How's your daughter enjoying the Model Y? For anyone that didn't see our first interview, Bruce bought his daughter a Model Y for an early Christmas present, I believe.
Yeah, that's actually my daughter-in-law.
Daughter-in-law. Okay.
Yeah, she's really having a great time with it, enjoys it, and I wouldn't be surprised if the sales of Model Y and 3 in Boise, Idaho are increasing because of it.
That's right. That's right. That's awesome. So do you want to, we've kind of we touched on it with the groundwork, talking about production and the Model Y, the Cybertruck. I know something you talk about, you're very vocal on Twitter, is your 2025 production estimates, of which I believe is currently you're sitting at 1.5 million. I know Gary Black 00 on Twitter, who's a former analyst, has his projections. I have his in front of me, and he's sitting at 3.52 million for 2025, but he still has 840 million in 21. And he has noted that he tends to be conservative with his estimates. I've heard, I think Rob Maurer of Tesla Daily has said he recently, if you saw that video, is estimating around 1.2 perhaps. So wanted to get your thoughts on on your math and your background. And for anyone that doesn't know, if you haven't seen the first interview, Bruce has done 10,000 hours of research. He's as close to a Tesla expert as one can be from a retail investor perspective. So I put a lot of credence into what he has to say, because I know he's done a lot of research to back it up.
Yeah, so I look at production and what, 3 months ago or 4 months ago, maybe even longer than that ago, I was saying that in the Q3 that Tesla would be producing, I think it was 160,000 vehicles, and everybody said, no, they'll never get to that. And then I was saying that at the end of the year in Q4, they'd be producing 200,000 vehicles and delivering 200,000 vehicles. No, that'll never happen. Well, we came pretty close to 160,000. And the 200,000, it used to be that like Rob Maurer and others were estimating like 180, 181, 182. And the latest from Rob Maurer was saying 200,000 vehicles in Q4 estimate for and delivery. So it's kind of nice to see my estimates that come out a lot further, ahead, are being now matched by people that study it a lot as well. And then what I'm looking at in 2021 is 1.5 million, like you said. And right now, like you said, the kind of the prevailing bull case is about 1.25 million vehicles in 2021. And my big difference on that is they're looking at China as delivering 550,000 vehicles in 2021. And I look at that, and if you compare the size of the Model 3 facility and the size of the Model Y facility, the Model Y facility is huge compared to the size of the Model 3 facility that's there in China. And it's a lot more efficient. The Model 3 is going to be Model Y is going to be a whole lot more efficient because it's a newer version, it's newer facilities, it's newer technology. I'm saying that they'll be producing 650,000 Model Ys in 2021 out of China alone.
Really? Wow.
And everybody's been amazed at how fast China has developed things and grown and, implemented this. And I think that's going to continue. It's going to get more and more. It's not going to level off. They're going to continue to grow. So I'm looking at 650,000 for China, and then 650,000 for Fremont, and then Berlin and Austin are kind of hard because they're just kind of starting up. But I just throw in, I think like other people, 100,000 for Berlin and 50,000 for Austin.
All right. So we talked about the production estimates. We talked about the Cybertruck reservations. I've seen people on Twitter who are ordering 3, 4, 5. I think I even heard 10 Cybertrucks. They're ordering a whole fleet. Do you have thoughts on people trying to order a whole fleet of cars and getting ahead, trying to maybe arbitrage the cheap price right now, full self-driving, and then operate a whole fleet of autonomous robotaxis in the future? Do you have any thoughts on that?
Sure. Actually, initially the night of the reveal, before the reveal was even over, is when I ordered my Cybertruck. And then the next morning, my son wanted one, so I was like, I'll order one for him.
Okay.
And then a little while later, I said, this is a really good idea to have more of these Cybertrucks around. You could probably lease them out and, or have them be on the robotaxi network for Tesla and make some money off of it. So I ordered another 6. So I have 8 on.
Okay. You're not the only one. I'm living in a little, I'm in a brownstone here in Atlanta, and I'm thinking I'd have to move to store all these vehicles. I don't know where I'd put them. So if you have the space though, or are you thinking they're going to be constantly on the road?
Yeah, that's kind of the thought, is that they'd be robo-taxis and that they would be driving around. You'd still need some place, at night when they're not in productive service because there's nobody that needs them. But
you can just park them in like random parking lots that overnight, if people aren't using them,
they don't get tickets.
Right.
But frankly, because I've made so much money in Tesla, I'm not really too interested in operating a fleet of vehicles anymore. It's just something I don't want to do because of the work associated with it. So I'm kind of thinking, well, my brother needs a Cybertruck, so I guess I'll give him one. And then
Yeah, it's giving them out. There you go. You give me one. Can we trade reservation spots? I'll still pay you for it. I get bumped up in line because I'm so far back.
yeah, so it's kind of fun.
And I think based on how bullish you are on the stock, coming from a money management perspective, you'd be better off just investing that money in the stock rather than taking possession of the Cybertruck if you're purely looking at return.
Yeah, that's one way of looking at it. The way I look at it is that I have more now than I'll be able to use, and so I might as well share it. So
Absolutely.
I'm thinking about just buying the Cybertruck and giving it to my brother, for example.
Right. But I was more so other people thinking they're going to operate the fleet as a business, and based on your bullishness, it seems like right now the best place to park your capital would be Tesla, because I believe you have a $20,000 price target by 2025. And I know on our first interview, which you should watch if you haven't already, you had a $600 price target for, I believe, end of October, which hopefully we may hit by end of November. So you wouldn't be too far off. And then I believe a 1,200 by February.
Yep. Yeah. Those are my numbers that I've had for quite a while. And I think what's going on, what happened with the $600 number is that there was enough there for the market to have it go up to 600. It's just that the market decided not to. The analysts didn't pick it up and don't understand it, and other people didn't understand it. Now I think that, the S&P 500 is here, and that's happening now. More and more people will take a close look at the stock, and it'll go up a lot higher than the $600 pretty quickly. And
What?
I was just going to say, so then $1,200 is, I see that as being February of 2021. And the reason for February is because in January, they'll be announcing the 200,000 vehicles or more that they produced and sold in Q4. And the profits will be even higher than they were in Q3. So it'll be new record-breaking profits. And then they'll be also announcing are you getting some feedback?
No. I can hear you fine.
Okay, I'm getting some feedback on my speaker then or something.
What?
Anyway, so I think what will happen is that, for the $1,200 in February, not only the sales and the profits, but also there'll be how many vehicles produced in 2021. And in 2021, I think that 1.5 million, or they'll announce 1 million. I think that's what they'll announce, is 1 million. And then they'll achieve 1.5 million. But all those things added together, I think, will drive the stock up to $1,200, as well as the progress in Austin and the progress in Berlin.
That would be incredible. That'd be quite the rise from our current close today, around 486 or so, I believe, right around there.
Yeah. So, and then, basically I'm looking at $20,000 as a share price in 2025. And people look at me and, you're crazy. How can you get to that? That's impossible. And first of all, that goes along with 20 million vehicles being produced in 2025. And how do I get to that? What I think is going to happen is that this 4680 tech, which we've talked about a little bit, by 2022, they'll be in production, successfully in production on 3 continents with that 4680 tech. And they'll have supply chains on those 3 continents to feed all those vehicle manufacturing. And then in the next year, or about that time, coming out with a $5,000 full self-driving EV, which will be less expensive than an ICE vehicle to buy new. And the operating costs will be a lot lower. And to me, I look at that and say the demand will be so great for that Tesla will accelerate more than they are already. And they're making 3 factories under construction right now. they'll be starting up 2 or 3 factories a year and expanding the existing facilities. So they will be huge, and people cannot imagine how fast they can scale up once they've got that 4680 tech production. So that's how I get to the 20 million vehicle 2025.
That would be quite the feat. So Gary Black's at 3.5 million. I know that you've conducted some polls on Twitter, and you've asked who's super ultra bullish and thinks that 20 million is possible by 2025. And I think I've seen a few people out there respond they are in that camp. Are you seeing more and more people as you explain your thinking and rationale, and it all comes down to acceleration? And I know Cathie Wood and ARK have talked about on the S curve, where it's hard to know exactly where we're at, but it feels like we're already accelerating like that, but we could actually not even be there yet. So you're talking about basically hitting that inflection point, and that's where you get this crazy share price of 20,000 and these 20 million vehicles by 2025, when other bullish people that cover the stock are honestly nowhere close. I mean, and I think Gary, I keep going to him because I have his chart in front of me, and he's a little more conservative, but he currently has 8.8 million for 2030, I believe. So yeah. You're blowing that's, and I think it's going to be sooner than that as well, for sure.
Yeah, and lots of times when I say that 20 million vehicles in 2025, people say, well, Elon's only saying 20 million vehicles in 2030. Well, right. What it actually says at least 20 million vehicles by 2030. He's not.
Yep. Yeah, I think he almost hinted maybe at 2028. And so if we're going back where Elon was punished so much by the street relentlessly for being too optimistic, and that's one of his biggest criticisms is people say he's too optimistic and he's a little bit early. I think he's learned, and he's basically to sandbag. The name of the game with public companies on Wall Street is UPOD, under promise and over deliver. And I think Elon finally, at least externally, maybe not internally, when he's talking to his team and constantly driving people to push and accelerate, is under promising and over delivering. And if you look at the last few quarters, I think that's exactly what they've done.
Yep, I agree. It was, I think we talked about this before, but basically through kind of the middle of 2019, Elon was over promising and under delivering. At that point, it seemed like he just made this shift. He said, okay, this isn't, or maybe somebody talked to him and got him to change. But from then on, it seems like he's generally, there's still exceptions like the full self-driving, but he's generally now under promised and over delivered. So that's good.
Absolutely. And going along the full self-driving, I have a question from one of my friends. Actually, he asked me this the other day. We were out in Asheville. He said, when will I be able to let's say I purchase a Tesla and I purchase the full self-driving. When do you think I will be able to drive my Tesla out to a bar, get drunk at the bar, then be allowed to take my Tesla and have it drive me back home? And I won't be touching the wheel, obviously. I'll be drunk, and it'll be perfectly legal for my autonomous car to take me back home. I don't want to take a robo-taxi. I want to take my own car because I want to drive it there. And I was like, well, it's so hard to answer. I have no idea with regulations and stuff like that. But if you had to guess, what would you say is sort of your timeline for that being able to happen?
Yeah, so that's pretty much equivalent to when the robo-taxi fleet will be rolled out essentially and operating. It's kind of the same level of full self-driving. And what I see happening is before Christmas, Elon is pretty confident that this full self-driving feature complete will be rolled out widely. And so that's kind of he's put that out there pretty much as a Christmas present for everybody. And then what's going to happen is, so that's like 99% complete, but then you have this march of nines where it has to be 99.9, 0.99999. You just keep going because people are going to expect that level of how well the full self-driving operates. That I estimate will take at least a year to do that. And then in 2022, we'll start to see some jurisdictions allowing the full self-driving robotaxi. And by 2023, I think it'll be pretty much around the world. I think it'll happen fast, just because the learning process that they're doing, you know, that they're right now learning, but then they're going to have dojo starting in 20, I can't remember exactly when that was. Sometime in 2021, I think they're going to have dojo, and then they'll really be able to learn fast and improve and along the march of nines.
So you think that full self-driving will be 99% complete, accurate, more so to say, by this Christmas, which is a major catalyst for how you're getting your short-term price targets?
I wouldn't even say that's a major catalyst. I think 99% is not good enough as a robotaxi.
Right. It needs to be 99.999 repeating.
Right.
To be to the robotaxi status.
Yeah. I look at the 9% as pretty much feature complete. You can do everything you need to do. It's not perfect. You need to monitor it. But that to me is 99% complete. Considering where we've gone, you know, from zero to up to this point, that's 99%.
Right. So
you've probably seen, and other people have seen the videos that are out with the beta version, and it's amazing that a car with full self-driving beta version can now drive through sections and avoid pedestrians, avoid bicycles, and do it smoothly. That's just amazing.
Yeah, I've seen some of those videos. It's pretty incredible. I really wish I owned a Tesla right now and I had access to that feature. That's awesome.
Yeah.
So I saw actually earlier today on CNBC, they did a study that only 50% of kids 19 and under have their driver's license. And it showed a trend from previous generations. And you can imagine it kind of went like that, where kids aren't as interested in driving, which I think suits well for this future autonomous robotaxi network.
Right.
Do you think that, I heard Dave Lee have this debate with the Now You Know guys the other day, how long will Tesla stop selling cars this decade? And will it just all be robotaxis? And that, so let's say they hit your 20 million production target in 2025. Will the demand even be there now that we have autonomous robotaxis? Will people just say, hey, I don't need to own a car and store it? And, crowded cities like New York, it's going to be a pain to park and all that. I don't want that hassle. It's so cheap. I'll just use the autonomous robotaxi network.
Yeah, I look at 20 million, what we call 20 million mile full self-driving EVs. That's what we produced in 2025. Those will just roll out of the factories and go directly into fleets. They will not be sold to people.
Do you have do you want to put a estimate on the percent that will just be owned by Tesla and operated by Tesla that won't actually be going to people?
I think in 2025, it'll be all of them.
All of them. Okay. So really, I'm going to get my Cybertruck, hopefully sooner, but at least by 2023, but 2 years later, no one's going to be very few people will be actually owning these vehicles. They'll just be using them as a utility.
The new vehicles.
The new vehicles.
Existing vehicles. There'll still be lots of ICE vehicles rolling around. Although people will not want to do that anymore because, as Tony Seba said, by the time you get to that point, it's going to be less expensive to buy and operate an electric vehicle with full self-driving than it will be to just operate an ICE vehicle. So just buying the gas and maintaining the vehicle will cost more than the combination of capital cost and operating costs associated with an EV.
Wow.
And why would you want to own an ICE vehicle, even just owning it? Why would you even want to have it?
Right. And I heard Stephen Mark Ryan say on Solving the Money Problem the other day that people who have leases on ICE vehicles may just decide to stop paying their lease because the vehicle depreciates so fast, it's not worth it. And they'll just pivot to taking these robo-taxis and say, yeah, sure, go repossess my crappy ICE car. I don't want it. It's not worth it. And then these auto manufacturers that have mountains of debt will eventually go under because people will stop paying their leases. And that's such a big part of their business model is 0% APR financing. And they're on the hook for these leases. Do you agree with that sentiment?
Yeah, I agree. And even if they do go ahead and out their lease and make the lease payments, at the end of the lease, they're going to give the vehicle back to the car company. They're not going to keep it. Well, it's worthless vehicle at that point. But the car companies aren't, their finances don't line up with it being a worthless vehicle, but it will be.
So the red hot used car market we've been experiencing during the pandemic, as people have taken less and less public transportation for safety reasons and have just bought cheap cars, that's going to go away even
actually
after COVID.
Different spin on that. I think we'll actually get more red hot before it goes away. And what's going to happen is in this time period between now and 2025, people are going to say, well, wait a second, why do I want to buy an ICE vehicle? Why do I want to get another ICE vehicle when I know that this EV is going to be so much better? I'm just going to wait, to buy it or to use it or whatever. I'm not going to go out and buy a new ICE vehicle. And so the sales of the ICE vehicles are going to plummet way before the EVs are sufficient to meet all the needs. And that's going to drive up the demand for used ICE vehicles, and it's going to drive up the demand for shops that are fixing up ICE vehicles because people want to keep them instead of buying another one. So there's going to be a hot market actually for ICE vehicles, used ICE vehicles, a pair of ICE vehicles. Then it'll drop off the cliff.
Yeah. So do you see, let's say 2 years from now, I guess, which is fairly optimistic, late 2022, Tesla achieves feature complete full self-driving. They accomplish the March in 9s. Would they ever consider licensing out that technology from maybe a moral standpoint? Hey, this is going to save lives. It's irresponsible to let people just be driving on their own with such a high accident rate compared to our technology. Or say we're only going to do that with other EV companies because we don't want to keep alive and promote ICE vehicles and pollution. How do you see them taking advantage of that? Or are they just going to keep it for themselves and say, you want our tech, you got to buy a Tesla?
Yeah, I think Elon's open to sharing it and licensing it to others, but I really don't think it'll work. Because what you have in the Tesla vehicles, you have a combination of the vehicle, which is lighter and it's more efficient and everything, and the batteries, and the full self-driving. All of those things work together as a package. We've developed it as a very effective package. Well, you can't just sell some part of that,
right,
to another company. It just doesn't work. Not going to be effective to do. That's why I think what's going to happen is what I described earlier, is that there will be so much demand for the Tesla self-driving EVs that they will accelerate the production of those vehicles. And they'll just go faster and faster in order to meet that demand. The other thing is that the 20 million vehicles a year, that if each one of those vehicles was a full self-driving EV lasting 1 million miles, 20 million vehicles a year is about the sustainable level for vehicles. You don't need to produce more than that because they're going to last. Each one of those vehicles will replace about 13 ICE vehicles, the way I look at it, because it'll last so much longer and because it'll be having a higher utilization. It'll have like a utilization of 5 times what an ICE vehicle would that's sitting around most of the time.
Right. Maybe more.
Yeah. So I see one full self-driving EV replacing 13 ICE vehicles. And if you look at that math, 20 million is a sustainable level for full self-driving electric vehicles. That'll grow over time as people want to have more and more mobility. So there will be some increase in that. And I also don't think that Tesla will have 100% of the market share. I think they'll only have like 80% of the market share, which is still really, really high.
Right. So looking at Gary Black's estimates, he has the global market share around 80 million. And, you know, in 2025, he only has Tesla's EV share at 22%.
Yeah.
And he only has industry EV penetration at 20%. So
Right.
you're much more bullish on overall, like you said, the acceleration of EV technology. People still aren't fully appreciating that, as well as Tesla, who I know the competition is coming. Everyone, we've all heard that. Not only is the competition coming, but they're not going to be relevant because you think Tesla is going to accelerate their share of the EV pie as the EV pie grows.
Yeah, I think as the demand grows for the EVs, the full self-driving EVs, I think Tesla will just respond to that demand and accelerate even faster, because they'll have all the tech in place, they'll have the production facilities, the production know-how, and they will have ramped it up. Supply chain, you know, in 3 continents at least, and they'll just ramp that up to meet the demand.
Are you baking in 50% plus margins to get to your 2025 price target? I mean, 20 million vehicles, and I know that's hard, or even higher maybe, because those are all going to be essentially robo taxis. How are you modeling for that, or generally speaking?
It's really hard when you get out to that point of actually coming up with a spreadsheet that shows exactly what it's going to be. There's so many variables.
Yep.
And, you know, frankly, what I look at is, okay, if you have 20 million EVs, you also will have an energy division that is equally as large as that.
Oh, that's true. We're not even talking about the energy aspect of the business. It's easy to forget about that energy spike because it's so small right now, although we can see from last quarter, it's growing rapidly, and Elon's very excited about the solar roof.
Yeah. Yeah. So you'll have the electric car production sale at that point will not be really selling vehicles, but you'll have that production side that'll produce generate revenue. And then you'll have the battery and the solar stuff, which is the hardware. But what you'll have in addition by 2025 is the full self-driving software will be the real moneymaker on that side. And on the energy side, the auto bidder software will be the real moneymaker on that side. How do you estimate what those are going to be? What I did was looked at it and okay, that okay, $20 million.
Yeah.
$20 a share. It becomes a point where you just have to kind of pick a number, and that's the number I picked based on all of that information. Part of what lots of people will sit down and I don't want to disparage accountants because they're very important, but what they'll do is and the analysts will do the same thing. If I can put it down in a spreadsheet and calculate what it would be based on known information, then that's my price point. I don't do
right.
and say, well, yeah, but this is likely going to be much higher than this, and it'll be more like this, and this is higher, and it'll be more like this, and you know, then I kind of look at with my intuition and my basic knowledge, and what the future holds. You know, for example, with Tony Seba, what he says that will happen, then I come up with the $20,000. And the other thing, people, you know, we've talked about this too, is that people don't realize that Tesla is, well, we all know that they're not just an automaker, they're also software, but they will be disrupting the largest corporations in the world who are producing vehicles and producing energy. They will be disrupting all of that. So you look at that stuff, and that's like the 10 largest corporations in the world are doing that.
Right. Yeah. People, I think, don't realize how big utilities are because it's kind of boring and it's often quasi government run monopoly in a lot of areas, and disrupting that industry alone is tremendous.
Yep.
And we're still in the infancy of the energy part of the story, which is why I think so many people still tend to ignore it, although more and more people are coming on to the full self-driving and the autonomous robotaxi part of the story. So with that said, I'm pretty sure that you were 100% invested in Tesla per our last conversation. You don't own any other stocks. Is that still the case?
That's still the case. It's all either Tesla options or Tesla stock at this time.
and you have the same strategy where after a big day like we had today, where Tesla finished up 10% or something around there, now that you've freed up some leverage, do you now go and roll out those options and exercise, or let them exercise and be more aggressive? Or what is your kind of strategy for managing your strategy on big up days?
Yeah, so over the last 3 months, Tesla's reached 500, then they came down, went back up, and that actually caused me some problems because I was heavily margined, and I was borrowing against the stock that I had. I borrowed against the stock in order to exercise some options, and I also borrowed against the stock to help my daughter buy a house, and build my addition, my garage onto my house here. And so I was like up at the maximum 40% of stock was in margin. And so it was kind of interesting. Yeah, we could get it from my brokerage, and it's, well, you have a house margin call. And then the stock would go up, and then it would go out of margin call. And then the stock would go down, and it would go back into margin call. And they gave me 4 days, to cover the margin. And most of the time, we just went back up, and it was fine. A couple of times, I ended up losing some stock because of that. They had to still, in order to maintain that 40% ratio. But yeah, I have not sold, except for the margin call. I have not sold any stock or margin or options, and I'm continuing to hold it. And now what I'm looking forward to is, now that I have more margin available to spend, I, first of all, paid off some bills that I needed to pay. And the other thing I want to do is to buy more options with it. And kind of the same approach that I used before, which was about 90% of them being longer term, longer than a year. And then maybe 10% being more aggressive, looking at a shorter term. What I do on the more aggressive ones is look at, okay, 6 to 12 months from now, I think the stock will double. And so I'll buy options that reflect that. And it's a gamble. In that short of a time period, you don't know exactly what's going to happen. But in the past, that really paid off, as we talked about before. I had one set of options that grew from $23,000 to $1.8 million.
Yep, absolutely. That's awesome. Yep. And I will say as well, I did face a couple margin calls these past few weeks, and I'm still about 80% in Tesla. So I would sell Amazon and some of my other stocks to clear some room. But one of my biggest pet peeves is, now that Tesla is, it's been close to a $400 billion stock for a while. It's the largest stock ever to be added to the S&P 500. Schwab is my brokerage. They have a 65% special maintenance with Tesla. And for comparison, NVIDIA, which actually trades at a higher price to earnings growth rate and is a smaller company, it has a standard 30%. And Tesla has over twice the requirement. So it's frustrating, because with the volatility on these days, it pulls back, and you get those calls and you got to sell. It seems kind of ridiculous at this point in time, especially now that it's been added to the S&P 500, that it still has such a high maintenance. Square, another stock I own, my second biggest position, is 50%. So why is I understand it's a volatile stock, but it seems a little ridiculous to me.
I've asked that I use Fidelity, and I've asked them about that. And is there any flexibility? And they basically said there's no flexibility. It's just a formula, and they just implement the formula.
Yeah. And I think I heard guys months ago, when they upped it during the heat of the pandemic, guys got margin call because they took it maybe from 50% up to 60 or 65%. People immediately, they're like, okay, well, you just screwed me. Now I got to sell out. So that's what makes me a little nervous about being all in on Tesla. So I've slowly been increasing my exposure by selling off my other stocks that I've had a long-term gains in as well. So that's why I'm trying to get to the point where you're at with all in on Tesla. But that gives me pause with with the margin. So if they bring that down to 50%, which I think is more than fair, I'd love to see that, and that would definitely help me get in there more.
Yeah, so I can only, like, if I had $100 for all-in stock value, I can only borrow against $20 because I'm exclusively in Tesla. And when you're like that, then they let you borrow even less.
Oh, really?
Yeah.
So say that again. It cut out briefly.
$100 that I have invested in Tesla stock, the $100 of value in Tesla stock, I can only borrow $40.
Okay.
Take it
Got
out.
it.
If I want to borrow the money in order to buy more stock, I can actually borrow 60%. So I can borrow a little bit to, for example, exercise the options into stock. I can do that up to 60%. But to take money out for, like, for addition or for buying more options, it's only 40%
Got it.
value.
So it's because options are inherently more risky than buying the stock. They lower your
Yeah,
margin, or they increase actually.
it's just taking it out. Essentially, they look at buying options as taking the money out of the account. For example, when I helped my daughter, I just took the money out of margin. And that's what I used to help her buy a house. And basically that same ratio of 40% applies whether you're taking the money out completely or if you're buy options. They assign no value to, I guess, basically.
Yeah, well, I have a couple options expiring on Friday, and I think I paid way too much premium for them. This was maybe pre-battery day. I got caught up in the hype, but they're fine. They're in the money now, and it's crazy how quickly they can appreciate, but at the same token, they can also depreciate extremely quickly as well, especially with the time decay. So
Yeah.
I understand why they're conservative on those options. Did
Yeah.
you want to expand upon more? I know last time we spoke, you talked about Tony Seba and the microbial fermentation and kind of your long shot, super down the road vision for Tesla. Do you have any more thoughts on that going way down the road, maybe 10 years?
Yeah, I can expand on that. So what I look at is Elon has a goal of establishing a colony on Mars. And so I look at it and say, okay, what does Elon need to do in order to accomplish a colony? Well, he needs to have spaceships, obviously. So, okay, SpaceX is going to take care of that. And well, he needs to have transportation around Mars. So, okay, Tesla will take care of it. And they also need to have buildings that really good HVAC systems on those buildings. He's now looking next year of having some introduction of an HVAC system for houses. So that's the next step. The next step, though, if you start looking at, okay, to establish a colony on Mars, you need to have food. Well, I think Tesla's going to get into food production, and you can't just have normal farms on cows and everything on Mars. And so Tesla's going to get into what is referred to as programmable microbial fermentation, which is basically taking really simple food or simple agricultural products and converting them into high-level proteins that people can flourish. And then also produce materials. Right now we use oil to produce plastic. Oh, you can use programmable microbial fermentation to produce plastics. That'll be a really important thing on Mars as well. So I see Tesla getting into those areas, and you've probably heard little bits and pieces about how Elon is helping to produce the medical equipment that's needed now to produce. So I think they'll get into the medical field as well.
I saw they were helping out with some of the mRNA vaccine, actually with the manufacturing side of that, because and that goes back to what Elon has said is he thinks long term the legacy of Tesla will be that they were an incredible manufacturing company. And that goes back to manufacturing food. Everything comes down to manufacturing. And so if they can become incredible at that, incredibly efficient, incredibly fast, they pretty much manufacture anything they want, right?
And it's that manufacturing ability as well as the drive to be able to establish the colony on Mars that is really driving Elon. And all those things that we've been talking about are all very much towards the sustainable life on Earth as well. It's not just Mars, but it's also sustainable life on Earth that is driving a lot of what Tesla's doing.
Right.
One of the things that people don't realize, well, two things. One is Tesla's goal is to accelerate the transition to sustainable, transportation energy. But the first word in that is accelerate. And I talked about this before. And acceleration means that you're not just going at the current speed. You're actually going faster and faster all the time. And that's what I bake into my bullishness, is that Tesla is going faster and faster all the time. And I think that will continue over time. The other thing that's really important to me is that Tesla has the best people as employees. And you take the best people and group them together, and then they have the motivation is not just to make money. Their motivation of most of the people at Tesla is to make the world a better place, and love for the earth and love for all the people that are on the earth. And that is just a huge driving factor that people totally underestimate. You take the best people and you give them the drive of love for the world, they can do pretty much anything, like a superpower.
Have you ever thought of investing in Spacex? Because I was on Twitter the other day and I followed a guy, Alternate Jones, and he was talking about, I think this may have already passed, but getting together investors to invest in SpaceX through Forge Global, I believe was the company. And it was like $250,000. It was a pretty sizable investment in SpaceX, but SpaceX, its last valuation was at $39 billion. So being a huge fan, believer of Elon, his mission, there's obviously a ton of similarities between Tesla and SpaceX. And as you talked about going to Mars, would you ever invest in SpaceX?
I see that as a possibility. Right now, I'm fully leveraged into Tesla. While there are some limited opportunities to invest in SpaceX, you have to really be going out of your way.
Yeah, it's not like buying a stock. It's much more difficult, and that's true. You can't use leverage unless you take out a pledged asset line in order to invest in the company, right, which is a little tricky as well.
Yeah. So for now, maybe it'll change in the future, but for now, I'm just happy with Tesla and the investments that I have in Tesla.
Absolutely. Well, Bruce, I really appreciate your time today. Was there anything else you wanted to touch on before we go?
I think we've pretty much covered everything. I'm just looking at some of my notes here, and yeah, we've kind of gone down the list of things. I just am, very bullish on where Tesla is going to go and where it's going to be in the next 5 years, and that seems to be supported by lots of different factors. So I'm looking forward to it.
Absolutely. I am as well. I was always a Tesla bull, but speaking to you now has made me even more bullish. And I think that I love your energy and your bullishness. And I think it's only going to spread as more and more people realize it. And in a month or a little over a month, almost everyone's going to own a piece of Tesla when it's added to the S&P 500. So I think, as you said, the story really hasn't changed tremendously with S&P inclusion, but more people are realizing the story and it's becoming more widespread. So I look forward to continuing the conversation with you. Maybe in 2021, hopefully Tesla stock's trading over 1,000. Who knows?
Yep. Yeah, we'll have to do this again in January, February when that happens, and I'm pretty confident we'll see.